Hey everyone, I'm here with Guy Cohen from wisetraders.com. Hey Guy, how you doing today?
Good, thanks, Casey. How are you? Good to see you.
I'm doing much better now that I have made a massive improvement in my market timing recently.
Oh, you don't say.
Yeah, yeah, it's
What's the secret?
well, the secret is that you've been giving me updates on when you think the market timing is going to happen, when the market's going to drop, or when it's oversold, when it's overbought, when we're ready to make a move. And I really appreciate that and have come to really respect your decision making process and your indicators that you've developed that have really helped you do that. And so I wanted to bring you on today to talk about, your indicator, your process, and how you've been able to really get a nice accurate timing as far as when the market's going to make a reversal or not.
Absolutely. By the way, did you claim all the credit for yourself when you were doing it?
No, no. I say that this guy that I know.
I don't mind. I'm not vain. I'm not vain. I do you know it's with market timing. I'd love to say that because it's considered a bit of a holy grail for the industry. No one can time the markets, and so we're not going to get above ourselves here. But obviously, you've seen that we're a little uncannily good at it. I'd love to say it was a process that you just flick a couple of switches, but the truth is that it's a multi-layered process, and you see me going through it every weekend. I actually show you what I'm doing, and it's a combination of trend, of mean reversion, of OVI, that's my options volatility index indicator, the patented indicator that we have, key levels, and also just having that regular contact with the market of viewing several hundred stocks every week and getting a feel for where everything is. And when you put all that stuff together on a regular basis, um, and don't micromanage it, then it seems to produce magic. I mean, we're really good at identifying overbought or oversold conditions for the indices, and that's just logic because you will get mean reverting behavior during those situations, but also with trending behavior as well. It's also really important that if you get a trend forming, then you want to be on it. And of course, it has two big implications: being able to time the market well. And by the way, interrupt me whenever you want to, because once I'm going to get on a roll, I get on a roll.
Well,
Um,
I will throw in the question. Right now with the way the market is moving, and I'm talking specifically like the Dow 30, the trend is kind of been sideways recently. Like it's had a big move up, then a move down, and we haven't really made any new highs as of late. So that makes it a little more difficult, right?
yeah, well, what I'll do is I'll share the screen actually now, and just so we can get on there. By the way, there's look at that guy there. Look at him. There he is.
Perfect.
Look at that. Look at that. Let's have a look. We only go into an introduction of me. I'll go back into these slides. This is market timing. Actually, we want to go into the charts. Let me just do that with you right now. And you want to, I usually start with the SPY. I have a lot more things going on with SPY, but if you'd like me to have a look at DIA, I
SPY
can.
is perfect.
SPY is perfect. So really, if you look recently, you got to a position where this is all OVI stuff. This is what the options traders are thinking about things. And as you can see, they've been negative. We actually went bearish on the SPY there with that big overbought red, what we call a monorail. It opened high, closed low as an unusually long bar, and it was overbought at the time. And we could also see that there wasn't much appetite for bullishness in the market at that time. So that was a great call, because if you'd gone straight from there all the way down to here, you are talking about doubling your money on deep in the money options at that point, because these ETFs have very low implied volatility, which means you can have smart leverage, have no exposure to time decay because you're deep in the money and you've got bags of liquidity. and you can ride that all the way down. So that's kind of nice. That's one of the big benefits of being able to time the market. You can take advantage of great liquidity in the options market on these ETFs, even when you're deep in the money. So you can literally eliminate time decay from your concerns. Um, but that was that. Where we look at it now is we went right through that 200-day moving average, and we did what we call a waterfall. You'll hear me talking about this. We go down, we bump against the 200, then bump back up against the 50, but there wasn't really any appetite there. And so once we started to fall again, we went bearish again on that low from 430 downwards. That's the breakdown. And then it gets to a point where it just gets oversold again. And the real point here, Casey, is that once you're down here, and don't forget, this is an index. An index is made of 500 stocks in this particular case. You don't want to be chasing that thing down, because the chances then become much higher of quite a savage reversal. Now, we didn't get the savage reversal in the first two bars, but boy, we got it, on the next two. And so we just don't chase. If we can't do anything at the right time, then it's best to leave it alone and wait for a more, a safer opportunity to get
Okay,
in.
so I got a couple questions here. When
Go for it.
you're looking at you use the OVI, which helps you understand some options activity. But when you're looking at the SPY, are you just looking at are trading the SPY itself, that the actual ETF, or are you looking at how all of the stocks are mixing with, because there's so many different stocks, there's 500 different stocks in there.
Yeah, that's
Are
right.
you just looking at the SPY itself, and then that's all you need to know for this?
No, it's a little more involved than just looking at the index. I mean, the magic happens as, of course, we are looking at the SPY, and we're also looking at the Russell and the Dow and the Nasdaq as well, because there's generally some decent correlations for them a lot of the time, not all the time, but a lot of the time. Obviously, what was driving the market up, earlier this year was the Qs, was the Nasdaq, that had a big correlation with SPY at the time, because of course the dominant stocks in the S&P 500 happened to be the tech stocks in that one, and obviously they've recalibrated since that time, but the top seven, they're all basically tech stocks effectively in the Nasdaq, well, mainly. So from the point of view that, how do we do this? And this is a process that's evolved over time. And a lot of it I have actually to thank my members who demand it from me. And so I was just delivering them a service. And it just so happens that we just kept on getting it right time after time. And then you realize you're onto something. I don't know about you. In fact, I'm sure you've had the same thing. I would bet that a lot of your own success and technique has owed an awful lot to being put under the spotlight by your members over time, and you've got to step up to the plate.
Yeah, and there's some definite truth to that, and it's also, when you are teaching and training and helping others, it helps you do a lot better job personally,
It
because
forces there's a certain type of pressure on you, particularly in the markets, that has made me better, and actually has made me a lot more creative, and actually led to the creation of OVI itself as well. It was a great story. One of my members had read a book of mine, and he was doing a technique I outlined in the book. It was very manual, took hours every day, and it just occurred to me then in the shower. I wasn't speaking to him in the shower, but I had a shower the next day. But it just occurred to me, why don't I automate this? Why don't I figure out how to make that, rather than a manual process, a more automated process? So it's
and is
just this
that how you
interaction.
created the indicator?
Well, that was
Was
the
you're like, okay,
inspiration
I need
for it,
to,
yes, because
yeah.
it was too much work before, and the indicator then, it fueled that pressure of being under the spotlight with your members and teaching, almost forces a creative output that has been unbelievably helpful to me, and got us to the point where we're going to be launching our own hedge fund, and that's all from that pressure of being in this industry with you, as well. So again, we've been able to evolve. I've been able to put a team around me to help do this kind of stuff. But in terms of the market timing, back to your question, that's my dog now barking at me. Am I allowed to just go and just quickly let him in because he's
Yeah,
going
just
to
kick
other
him
bark?
once and then
Here he
be on
is.
your way.
I knew it was going to happen. We did talk about this just a minute
I'll
ago.
share my 2 cents while you're doing that about the
Absolutely. I'm going to
charts.
put him on the camera.
Oh, okay. His guy's dog is very he likes the spotlight. Either that or guy's just a proud dog owner and
Here
wants
he
to
is.
share them.
There you go.
There you go. So was that Zippy?
That's Zippy. Yeah.
Yeah.
There you
Your dog is very spotlight hungry. He has to share the camera with you every
go.
time.
Unfortunately, it's like the kids have been having dinner. They're wanting to muck around now, and who knows what could happen here. So it's like that time when that very important political analyst or economist came onto the TV, and then his kids just started just running in on a live broadcast. Um, so we were talking about market timing. So yes, I'll look at each individual index of the four big ones, but it will take, you need to get the feel of what the dominant stocks are doing. That kind of gives you the feel of the breadth and the shape of the market. And there are other things that we do to understand market structure. So we have micro setups like the OVI, what's going on at the key levels like the 50 and the 200-day moving averages, really simple stuff. We look at this thing called shrinking retracements, which I have talked about recently. It's an incredibly difficult algorithm, but it's so powerful in terms of market timing. I'll give you an example because I think I'm showing my screen here.
Yes, I can see it. I would really like to learn more about this,
So
how
in
the
terms of
shrinking retracement
structure,
works.
what you're seeing, I mean, so if you look at, here's when we kind of started to turn bearish. But if you look at these, I'll go to the 9-month chart here, that might get a little easier. But what you can see here is already a move, this move here from May until, well, mid-June, then is followed by this move here. So move number one, move number two. Now in move number two, it goes up until you get that bar there, that overbought bar. We call it a monorail. One of my members called it the monorail bar. Overbought, reaching a high, opens high, closes low, reaches a peak, and we start to wobble around this area, even gapping down just a few days later. OVI, of course, not very happy at the time. But the move of number two in percentage terms is less than the move of number one, and even less than the previous move that was there before it. So you've even got sort of like move A. And so these up moves are beginning to shrink. And this monorail bar says, you know what, I think we might be done here. And then you get this move here, number three, call it, and you can see it turns over and fails at the 50-day moving average. That's your fail point here. And you can see now really clearly that these up moves are shrinking in terms of their magnitude. And so that's beginning to give us market shape, market structure. Now, technical analysts will call that a head and shoulders. It doesn't always manifest like a head and shoulders, but obviously you can see very clearly that in this particular case, it kind of looks like a head and shoulders.
Right.
But we don't look at it that way. We look at it as what we call shrinking retracements. And of course, when the up moves are lessening in magnitude, that might begin to show a bearish situation. And when the down moves start to shrink in magnitude, then that might be the start of something more positive and
So with
bullish.
this most recent move, we had three really nice downward moves.
Yeah,
Um, if we look where that monorail bar is,
yeah.
that's one, and then there's one after that, and then we have the third one. So was that part of the clue as to win this last retracement, the current bounce we've had? I mean, this has been just a great. The month of November has been fantastic, so it's been a
Yeah,
great
terrific.
bounce.
The thing is, when you get a move this savage, this is where a little bit of experience comes into play. So when we had the first 2 days of this bounce from an from an oversold situation, you're thinking, look, the natural sticking area is either going to be the 200 in here or the 50 up here. But it went so far and so, you know, it moved so far and fast that these potential resistance levels become obviously obliterated. And these kind of moves, this kind of momentum tends to have legs. Now, of course, last weekend I said, look, we're probably likely to slow down at this point. That, by the way, that's no genius in that one. It's pretty obvious that having had all this, it's not likely to keep on going parabolically, particularly being an index. Remember, this is not like some upstart or GameStop. This is an index of 500 stocks. So the feeling right now is that yes, there's upward momentum, but around this level would be a very good area for the market to pause, catch a breath, get past earnings season, and then you're kind of into the Santa rally kind of situation, and we'll see what happens there. It needs to hold thereabouts in that 50-day moving average area, and then we might just you drift upwards into the Christmas period. So that's the way I'm thinking of it right now. Um, Obviously, before we got to this point, before we got oversold OS, this was really clear. We had red OVI. Other indications were saying red that strong stocks weren't performing very well, and it seemed to be pretty clear that we were going to go down. But it's really really important for any trader. And by the way, I'm not going to say any trader, but any trader who follows what we do is we like to trade, you know, sideways movements near these key levels, because when you are at a 50-day moving average or you are at a 200-day moving average, you are neither overbought nor oversold at those levels. And so they tend to be high energy points and springboards to potential further moves. And so when you have what we call these big money footprints like OVI, like these key levels, like consolidations, like those shrinking retracements, all coming into play around those key level areas, you get much higher probability trades, much safer trades where you can determine your risk from the outset, where you're breaking out from, and where your stop's going to be. And therefore, it's just a very much more pleasant way to trade, and you can ignore all the other noise and conjecture and conspiracy theories out there that everyone else is wasting their time on, and that we
So
have our system.
with the market timing, and I've got a couple different questions here. So this is the first one I'm going to hammer at you. With the market timing, I know you've had a really good track record of hitting the timing. At what point do you, and we can talk about this here, but at what point do you actually make a decision on your market time, and how do you trade that? Like, do you wait for the candlestick pattern to develop? Do you wait for the OVI indicator to turn? When do you make the call? Do you just like, okay, it's at 410 and we're looking for it to turn at 410, or do you wait till it
Very
turns and you
rarely,
just say,
I'm very rarely going to set targets because they're very arbitrary. When you set targets, I mean, on what basis are we really setting the target? So I don't tend to do it that way. But for example, in here, I mean, there's the great thing about market timing in terms of if you're going to time an index. Sorry, I pressed the wrong button there. Is that you can do this. Once you see it failing at the 50 there, and you know everything's looking pretty negative out there, there's what I say on the weekend. But you can do, bull put spread up here. And as soon as this thing starts going down, that bull put spread, you can buy it back for pennies on the dollar. So that's one way of doing it, and it works really well with the indices. You're not talking about a stock that's suddenly going to come up with some kind of buyout and completely screw up a credit spread trade. So that's one way of doing it, and the other way of doing it is when you see either a continuation or failure going on. So, for example, there was a sideways move in there. There's like a consolidation kind of setup in there. So I just changed the color of
yeah,
my
it
pen.
tried to bounce, it just couldn't do it. It couldn't continue.
Exactly. And once it starts to fail off that level, then you can just say, well, okay, if it goes down through 430, then I'm short. Now, the great thing is, again, I mean, I say this because it's so important, is these index ETFs like the IWM or SPY are fantastic because, and the SPY, by the way, IWM is an even better one to trade than SPY. I'll show you a chart of that in a minute. But
Why do you say that it's better?
Well, it's more obvious and it moves quicker, and it's still super liquid, and and it's obviously got very low implied vols, even for the
Okay.
way deep in the money options. So again, I don't have to risk any time decay, but I can still get 7x leverage right from the get go, which means I don't have to chase any trades. I'll wait for the really obvious things going on, and of course, I can ring fence my trade really quickly as well. I can either take profit off the table or raise or adjust my stops accordingly because you're getting so much leverage. So it means I can be really fussy in a very liquid kind of situation. I'm not in a sort of futuresy kind of contract where if it goes wrong, it goes really badly wrong. I've just bought an option in that situation. So again, my risk is limited, but you get it right. And of course, you see how often we do get it right. You can ring fence that profit almost immediately because you're getting so much leverage on it and just de-risk it immediately. So I'm coming to really enjoy trading the indices. I've also got this other issue going on in that obviously we'll be launching our own fund in due course, and I will be quite restricted from trading stocks, but I won't be restricted in trading the indices. And so this is a really handy skill to be nurturing. And I think other people really enjoy it too. The second benefit I was going to say earlier, so number one is I can trade these indices with options and with good leverage, liquidity, and all those good things, rather than trading the futures, which I'm not really equipped to do that psychologically. But the other thing, of course, is if you're getting market timing right consistently, it means that there are going to be some high beta stocks which move quicker, that you can also time better as well as a result. Because if you're on the right side of market timing, then you're going to have a better chance of being right on individual stocks as well. So there's two big benefits to this skill that
So
we use.
do you make sure that your stock trade is in the same direction as the market timing?
Nearly all the time. It just makes sense to swim with the tide than against the tide. I found that. I mean, trying to be too clever in the markets rarely pays off. So I try to keep things simple. Of course, you do get times where either market direction is a bit ambiguous and you find a super setup on the bearish side. But if you look at what we were saying, pretty post summer, that most of the setups that we're seeing, the most of the really nice ones were bearish rather than bullish. Of course, with exceptions. And of course, even doing any kind of trend, you're going to get bounces the other way.
Okay, now I wanted to go back to the chart, but before I do, I wanted to kind of take a look at this market timing chart. Um, I see there's the red arrows and the blue arrows, and uh, that's kind of like your track record for your members,
Yeah, so the
basically.
arrow denotes what I said on a broadcast so I do a regular broadcast and said, okay, here's where we're going in market direction. And what you'll notice in the last bit, there are times where I'm going to just say, I'm not quite sure, I don't quite know, I haven't got a particular opinion on it. So that's when you see the gaps appearing
Hmm.
in there as well. So you don't always have to have an opinion. In fact, I'd rather you didn't, because there are just times where it's just a head scratch moment, and we have our signals, if you like, that we can act on, and if they're not appearing, then you know so I'll give you an example actually here. So bullish in this situation, despite obviously ovi being red in this particular case, there are other factors at play, and remember, this is the index, not an individual stock. And so when bullish on that situation, then we get above that key level, the 50-day key level here. But above that level, we're saying, okay, let's see if we can consolidate. In other words, go sideways and then break out from there. And that would be my signal for a further move potentially. OVI is still really weak. This was sort of an oversold kind of situation, but it didn't do it. It never broke out. And so it came back to the 50 and started to get weak and fail at the 50, giving you a level here underneath that 50-day moving average. Therefore, we could go bearish, and that's what happened next. So we took that box, if you like, and go, this is failure at the 50-day key level. The OVI has not responded. Other things that we look at, including many stocks, are also failing at these levels as well, or a similar situation. And so the where I'm thinking is going at this point in time, the path of least resistance seems to be down. And of course, that's what did happen, and it did it, in a precipitous way. So that's the kind of, I'm bringing, probably 6 or 7 techniques all at once into this situation. And of course, remember, by this point here, we already could see there were potential shrinking retracements in the market. These up moves were getting less and less steep, less and less in terms of their magnitude. And so there's a confluence of situations. Now, what I would love to do is bottle all this so that I don't have to do anything. But it's not quite, it's not an awful lot of work, to be fair, but it's not something that we can absolutely systematize. There is
So
one
you
other
can't
thing.
create a robot yet to make all these trades for you?
Well, we
Like,
do
because I
have
know
kind
that's a
robots. They're
big
just not
thing.
as, yeah, well, we do, but they're not quite as good. I'll show you what I mean by that. Luckily, I'm prepared. I thought you might ask. This is my market timing area. And the market timing area, the indicator I want you to look at here is this one here. This one I'm going to outline is my medium term timer. My medium term timer, you'll see that its overbought and oversold areas are in orange and they're asymmetric. So it's much easier to get oversold, and you can get oversold for some time in here. And then overbought is plus 0.80. Now, this particular indicator, when you test things, you have to test them in a really primitive way. Don't overfit. It's number one rule of any kind of systematic. I think most people overfit. They have 20 different things converging, and of course,
Right. Yeah.
once they do it with real unseen data, it stops working because they've just over-egged it. But this particular one, if you are to buy, just go long when it's in this area. This area is bullish. This little area is bearish, and then the other areas are overbought, oversold. And the the um, the trick was, if you short when it gets oversold, and you buy when it's not oversold, when it's in the buy area, and you then buy when it's also oversold as well. So let me just redo that again. If you sell when it's overbought, and you sell also when it's bearish in that little area, and you buy when it's bullish, and you buy when it's oversold, I know it's a mouthful there, then, and you just hold for 10 days at a time, regardless. And it's really primitive, by the way, this. Okay, so don't follow this, guys. This is just a test. When you've got that going on, your win rate was about 2/3 with doing nothing else, which is really, really, really good for such a primitive system. So the medium term market timer is also something I pay a lot of attention to, as well. So again, there are about 6 or 7 things I'm doing to get market timing. I'm looking at overall structure. I'm looking at key levels. I'm looking at OVI. I'm looking at this medium term timer, etc. And I'm looking at a bunch of stocks from week to week. And there's a certain way I'm looking at a bunch of stocks as well. I'm looking with filters using OVI, using shrinking retracements, using key levels, using flat consolidations, and I'm getting a picture of how the market's behaving according to the indicators that I have built and I use. And that's how I'm getting the market timing. It's like that. So we're not looking at advanced decline lines. We're not doing anything that anyone else is doing, which is also kind of funny. But it seemed, it works really well. And obviously, anyone can go into those public blogs and just have a look, and just make sure that we're not over egging our situation. But you've been following me for quite a while now, so I think you've got the gist of it now.
Oh, I'm still getting there. I'm gonna need some more hand holding. But
That's what we're here to do. Well, you see, it's we're doing something a little different, from, and it's really funny because Casey, this. There's a lot of tools out there, in the trading world, but the statistics of people improving their trading have not risen.
they've gotten worse, I
Right.
think. Yeah.
So you got all these tools now, and people are getting worse. what's that about? So we don't use the tools that you'll find on TradingView or other things. We use our own. They've been made by quants on my team and myself, and I think we have a different way of looking at things that's really good. Now, of course,
Well,
we're
that's
not
because you're a
flawless.
perfectionist.
Well, there is that too. That's it's called. I think it's called being anal retentive, is what someone called it.
So when I'm looking at the chart right now, I kind of wanted a little bit of just some guidance here. I
Yeah.
look at the chart, and uh, normally, without using the tools that I'm learning to use from you, I would pay a lot of attention to support and resistance levels. And so on the SPY right now, it's really pushing up against a previous level where it had a trouble making it, right? So you were talking about those shrinking retracements. The last time it made a bounce, it just couldn't really break this 438 price point. And you'll notice on the chart it went sideways, up and down, consolidated, then it broke lower. And
Hmm.
so right now it's right at that spot where it had a hard time breaking. We also broke the 200 and the 50. And so my question is, what do you think, and what are you looking for right now for your next clues about the market?
Yeah, so I'm looking now, all things considered, I'm looking for it to make a behavior around here. Because this rise was so steep, I'm looking for a behavior for it pretty much to go sideways with shrinking volume. So I'm looking for a consolidation of price and a consolidation of volume as well across the board with individual stocks. Now, what that will tell me is that there may not be the appetite to sell off at this point, because if I get the sideways move, and it can violate the 50 and it can be around this kind of boxy area, but if volume in the market is generally shrinking at that time as well, what it suggests to me at that point is that there may not be an appetite for a sell off. And if there's no appetite for a sell off in this area, then the next surge of activity should potentially push it further. I'd
Eh,
like to see a bit of OVI in the blue. I'd like to see what's going on with my OVI situation there. There were a couple of things actually I haven't mentioned. You notice every weekend I go into my dashboard. So I've got this dashboard full of pie charts, and there are
Well,
a
I
couple.
did notice that your OVI is starting to like, you have that check mark on the top of the chart there, and the OVI didn't check. It turns
It
green.
hasn't yet, and
And so in order to make that trade, you need to go green.
I look with market timing. Yes, I do. I mean, typically, it's not as important over a whole market as it is for an individual stock. But it sure would help if we start to go into that blue area. But you need a bit more. I mean, the OVI has been a little muted, I have to say, on SPY recently. Let's just pick up IWM, because sometimes the indices do interchange as to which one's behaving the easiest to interpret,
And
and that's pretty easy to
IWM actually
interpret.
has a red check mark there.
Yeah, well, it does at the moment, but it may well change. And obviously, you see how much more. I mean, let me give you this. So this here is a really easy trade. We've got a consolidation right near a key level of 200. You've got a massively red OVI, and you've
Yeah.
got support areas in here. So around the 182 kind of area. And that's obviously we were bearish at that time. Now, this IWM index, which, and look at the implied volatility, by the way, it's like 0.15 around there. That means really, really good, what we call smart leverage, so cheap options at the time. Again, I'm not a futures trader, because again, when you do a futures trade, if it goes wrong, you might have to, that's when you get margin calls and stuff like that. And I don't really
Right.
like that. So going long options, you can never have a margin call. You know what your maximum loss is, but you can get the leverage here. So at that point in time, right here, this 180, I think it was a 190. It was way, way in the money for even January. It's like miles away in time, and no time decay risk either. Um, you would get at that point about 7.5 times leverage multiple at that time, with pretty much no time decay risk at all. And then obviously, as it did that, what happened was that's a 10% move in IWM. And that actually translated, as the puts got further in the money, it turned into a 10x trade, because your leverage multiple will start increasing the further in the money your option goes. Having owned it at 7.5x leverage, it then turned into 10x. So that meant actually, as in 10%, that meant actually 100% gain on
So
those
that so
points.
100% gain is if you're risking $100, you're going to make $100 in profit.
Um, the If you're risking, well, if you put in, yeah, you're doubling your money basically. Yeah,
Okay.
100. So $1,000 in here. Now that's on. You're doing $1,000. Say, okay, $1,000 here turns into $2,000, but the
Right.
index only
Okay.
went down by 10%.
Yeah, and that's this is what I really like about this is you don't have to do this all the time. It's
No,
not like you have to be like this wizard day trader. That looked like the period of maybe 2 weeks. So if you can double your money on a 2 week trade, and just take a trade once a week or a couple trades a week, that's a
yeah.
really great way to
so
slowly grow
so
your
my
account.
my best students are people who have an average amount of trades, and that's for stocks. All this of around one a week, and that's an average. So you know that sometimes they've done three in a week, and sometimes they've done nothing for a month. And so they're really fussy. And I would, anyone, I would urge them to make it about quality, not quantity, because find your sweet spot, your system. This is ours, but find your sweet spot. If you find your methodology that works for you, that gives you confidence and a decent hit rate, I think that psychologically it's important to have a high hit rate in the sevens or eights rather than these people who try and go for home runs all the time. What you'll find is if you can pick off a pretty good win rate, then your psychology will make you stay with that trading plan, and that's a much more powerful thing moving forward. Of course, you have to be a little bit active. You can't just dip in and dip out and expect to be a winner. But a bit of regularity will end up saving you time in any case.
Yeah, and if you have a high hit rate and you get a decent size on the trade, if you're winning 50% or 100%, then your slow growth is pretty solid and you don't have to trade a lot, right? Because you're getting high accuracy, big risk to reward ratio. It's a really great way to trade.
It really, really is, and we also we have a trading plan that also helps a high win rate as well. We go for protecting a profit quickly. Now, protecting a profit doesn't mean you have to take it either in full or in part. You don't have to take it, but you can ring fence, you can raise, or you can move your stop quickly, and that way the worst outcome is going to be either a very small loss or a break-even situation. And of course, that takes the pressure off. And if it keeps on going in your favor, then suddenly you're into a winning situation, and your win rate goes up. And obviously, with a higher win rate, you have more confidence to stick to the plan. I'll show you one more thing on market timing. I think you want to get on with other things, but I have these pies, and these pies show me how many consolidations there are, what kind of trends there are. I've actually just put the shrinking retracements pie in now. We'll be monitoring that. But I have two pies in particular. When you click on a pie here, it gets into a little bit more detail. This one's my OVI moving average pie. I click on it, and what I see here is the number of stocks in the top 1,000, because frankly, they're the ones that can make any difference. In fact, even then, I could probably do the top 500, but 1,000 gives me a bigger spread. And these bars show me in green which stocks are above a certain threshold with positive OVIs, and the one in red say which stocks are have negative OVI below a certain threshold. And what I'm looking for specifically here is an extreme. So I'm looking for an extreme in the greens, which dovetails with an extreme the other way on the reds. And what you see is, look at this extreme here. And in the silver line is the S&P. There's an extreme here. There's an extreme here.
Hmm.
There's an extreme here. And what you see is it tends to dovetail very closely with the high of the market. Similarly, these extreme lows on the reds dovetail with small bars on the greens, and they end up being potential reversal situations. And so this is the mean reverting kind of tool that I use as well. Now, of course, most of the time you're not doing anything on an extreme in this case, but when you do get one, it becomes a really high probability situation. So that's another situation that I like to use.
So I wanted to actually ask you about individual stocks as well.
Go for it.
So how does this work with individual stocks? You know, you got your market timing, you're predicting the whole market moves, and then how do you filter out to find the best stocks to trade as well?
Okay, so for filtering out, so that becomes, I'll actually go into a slide so I can articulate it just nice and easily. Um, this is stock selection as it happens. So what, and there are lots of methods out there, and I'm not going to say that other methods are not effective or whatever, but this is what we do, and I think it's a very exciting thing to do. My whole philosophy is about finding uh, pinch points in the market where I can control my risk, but also where I can see that big money is potentially at play, which will impact supply and demand and therefore price. It's all complete logic, but I don't do it from a macroeconomic point of view. I do it purely on price behavior, volume behavior, options behavior. That's it. Now, the options behavior is, of course, the OVI. That's what that is. So in here, I'm tapping into what we call scarce information because no one else has OVI. So I'm looking at option sentiment in a way that's completely different to anyone else. That's why we got the patent for it. But while everyone else is looking for unusual options behavior, I'm not that worried about unusual options behavior because a lot of it's just noise in any case. I'm looking at market structure in terms of price with the shrinking retracements. That too is a proprietary algo that we know no one's got because it's so difficult to do. So that's the shrinking retracements piece. I'm also looking at whether there has been recent volume acceleration, recent price acceleration, key levels, whether they've crossed and held. So I want to know that a stock has gone up through its 50 and held it over the last X amount of days. And then at the end, if I can get a consolidation, that's going to help me manage my risk. But if that consolidation happens, let's just say stocks going sideways and volumes also shrinking at the same time, that too can then become a big money footprint, as we call them, as well. Now, I don't have to have all of these things in here. I mean, to get a full house is quite rare, but I do definitely need to see OVI in there. And I really want to see some kind of consolidation, although it can just be a sideways movement. And I look for my activity is I look for things which have been near or hanging around key levels because that's where the energy is as well. I can get a good bounce out and I can control my risk with sideways movements as well. So I'm really hot on these things. If I can get the bonus of seeing or filtering for the shrinking retracements as well, then I've got market structure in my favor as well. So if you look at all these kind of all these indicators that we've built, all of them are micro, like what's happening right now in the last few days, whereas shrinking retracements is more of a broader what's been going on in the last few months. Can I see that there's a market structure here? And I can show you various stocks, but that's my universe of how I look. And everything else, and you've seen me plenty of times now, Casey, I never talk about the economy. I never talk about the Fed. I never talk about interest rates. I never talk about inflation, the jobs report. I don't care. All I care about is this. And that makes us very focused and it makes us immune to all the noise out there. And so this is just our technique. And it, once people find it, they tend to find that it resonates with them because they save a lot of time and they become very, very focused on it. And it makes sense because ultimately what this really is supply demand at its absolute core.
Yeah, and I like the fact that you have a lot of filters, which is good, which is really what all these are. It's just to help you the right thing. And the thing I really love about it is that you've got it right built in your chart, right? So you can easily either A, scan for them, or B, if you're just looking through stocks, it's very easy to see what qualifies because you got the nice big green lights up there that
I
show
love
which
that.
ones
Do
you're
you know what?
looking
I
for.
love the green lights as well. I have to say, it's very exciting when you click on a chart and you see the lights come on before the chart. That in the new year, the charts will load a little quicker. But we have these things called fast filters. So these are all built on, if I were to type in, SHR, you'll see my shrinking retracements filters, bullish or bearish. And now I'm going to find stocks in one button that have some kind of shrinking retracement kind of setup in there. So I can find whatever I want very easily, either by clicking on the tabs or just by typing in. And you can create your own as well. So it's really handy. It makes it so that I'm not looking at charts with no purpose. I'm saying, okay, what's it looking like with consolidations? What's it bullish or bearish? What's it looking around, with activity near key levels? I've got fast fill. And when I combine all these things together, it gets really, really exciting because I'm very focused and I can, anything else I can just weed out really fast. So I'm not wasting much time when we're doing our filters. This is the prism that we look at the markets through.
Okay, yeah. So I've been practicing a little bit, and I made my first trade this week. No,
Do you want me
I
to
think
grade? Do you want me to grade
Friday.
it? Should I grade it?
Yes. How do
Yeah.
you know?
Okay. Okay.
Go
I see.
ahead. You know
Are
what?
you going
If
to
you
be
gotta,
teacher's pet, or are you going to be standing at the back of the class?
you know what? If you want to give me a spanking in front of the class, go ahead.
I think we'll go.
Like I'll
We won't go
take
that
it.
far. Yeah. Well, as you know, I mean, Casey, you're a prolific parent. That kind of thing. I don't know about you, but that sort of thing's off. That doesn't happen anymore. That kind of
Well,
parenting.
you know what? I actually, with me personally, this is my life. I like correction from mentors because I believe that in order for me to grow, you got to prune me, right? I want you to come in and cut out all the dead branches so I can grow. And it's a little painful when you come in and cut me up a little bit, but at the end result is I'm going to be healthier and I'm going to grow. So I like to get corrected.
Well, we had a lady called Chloe. She's based in Malaysia, and back in 2018, she came to my options event in Florida, and she attended remotely. And at the time, I was giving the 1 hour bonus one-to-one sessions, and so she popped up, and we did our one-to-one 1 hour session, and she basically pretty much had lost all her life savings bar for the last $3,000. And she's a really smart girl, and I must have really chewed her out, and I just said, like, I was black. What are you doing? Why are you wasting my time? And I don't know. I sort of ranted at her. I said, like, just do this. And step one, write it down. She wrote these notes. She's still got the notes. And then we did our session in June. So she came to the event remotely in April. We did our session in June. By October, she was up by 78%, and her win rate was up to 72% winners rather than 30% winners or something like that. And then, anyway, long story short, she has ended up 15xing her account, trading on average once a week. She's now so good and she's so smart that she's actually one of our mentors and coaches. And that's the kind of, but I gave her, you know, a bad time, but that way because this was a person who really should not have been throwing away stuff. Too
Right.
intelligent for it.
Yeah.
And anyway.
Well, yeah, I saw her presentation. It was excellent.
Oh yes, you did. You
Yeah.
did. Yeah.
Yeah, it was very
Isn't she?
good.
Isn't she
So,
good?
oh yes. Yeah. And
She's better than
great
me.
story. I love the story. It was really exciting. I liked the part when she said she rewarded herself. When she hit 10,000 in profit, she took money out of the bank. That's kind of exciting.
Do
Money
you
out
know
of the
what? Do you
account.
know what? If she, it is really good. But do you know that she has never compounded her profits ever, and she's still 15xed? Can you
Yeah.
imagine if she compounded them?
Yeah, it's time to as the mentor, you got to say, "Okay, just increase the size just a little bit."
But do you know what she doesn't? I'll tell you why she's comfortable. And so
Yeah,
why fix what isn't broken now?
that's true.
So
That's true. Yeah,
yeah.
if it's working and you're doing well, then go.
I,
Yeah,
I just
so
I just would have loved to have a testimonial saying that she went from like $3,000 to a million. That
well,
would be really
yeah, not and I noticed that in early October, the OVI started to get blue or purple or whatever. And then what I was really looking at here was that it was in a nice consolidation phase recently, in between 30 and 32, about a $2 phase. And so I had just had some good key levels. And I said, you know what? if it breaks out of that consolidation box, I'm going to buy it,
Which it did.
which it did. And so then I bought it last week, I think Thursday or Friday. And
Oh,
so right
okay.
now I've got like a $2 profit on it.
Okay. And it would have been nicer if you got that one, isn't it? That bar there would have been nicer.
You mean the yeah, well, it didn't break out of the box right away though. It popped up and then it came right back into the box. So yeah, it would have been nicer because I got in after the gap,
Yeah, okay.
which is
Okay.
so I lost a little bit
Well,
of ground.
here, so there's two things I'd say to that. Certainly, I don't think that's horrendous at all, but I would rather have picked it up here earlier on in the consolidation after it broke out through here. So right now you're seeing blue and you're seeing it go through a key level and you're going then into a consolidation. So that's nice. So I prefer to get in, it's had a few bars already. That one would have been the better bar to go in. So this is really savage critique. So that's on October the 24th, because if it's broken the high of this lot, I'm in. But you're going to wonder why it wasn't in my lists, because I know you're going to say, Guy, you didn't pick this one up. Why didn't I pick it up? It's on the chart right now why I didn't pick it up. I don't dislike what you did here. I actually really like it. I think that you've
No,
even
well,
got, you
I have
wouldn't,
no clue why you didn't pick it up. So tell me.
it's on the chart.
Okay.
So one of the things I filter for all the time now, virtually all the time, is smart leverage. And this, with implied vols up at 60, 70%, won't make my filters. So I'm
Okay.
typically
Okay.
filtering that out. Now, it's only so that I can make sure I'm
Well,
in with
I didn't
liquidity.
learn that technique yet because I don't have that on my chart. I just have
Oh,
I
you
only have two
do. Yeah, you do.
indicators.
Oh, you do on these charts. It's just
Oh,
here.
I might have to click the button. Let me check.
You got to
Oh,
click the
yeah,
button.
I didn't know about that. So now I just clicked the button. So now I have it. Okay.
So hang
Good.
on. If let me do something just to wow your audience here, because this is yours. That's the Casey version.
Yes. Yes, that's the one
So
I'm actually looking at right now.
that's the one you're looking at right now. By the way, do you know what? I'm locked out of it. I've gone in with your I've gone
Well, I
in with
didn't
your
want you
login
messing
here.
around in my
Yeah,
platform.
no, I didn't do anything. I promise.
No, I didn't
But I
change
no,
a
I
password. I
no,
didn't do anything.
you can't do that. No, but they locked me out of it, and I go because I want to go into yours. Anyway, they'll let me in tomorrow.
It took me a
But
while to figure out how to get in, but yeah.
no, well I went in with yours okay. It was my password that failed. So I'm back on this one. But you've got all this, so you know where to come to support. You don't even have to go to the support team. You can go straight to me. Get gold standard support. So I like it. I mean, so all I would say on that one is that that's where I'm interested because it's on the radar if it's crossed and held within a certain amount of time. Which that's so I'm going to give you a tick mark for that, a tick mark for that. This is good. I mean, a move from 25 to 30. There's momentum here. Visually, it's not visually. You are kind of seeing that something's going on here. That these downward movements seem to be shrinking. If it then bounces off here, then there's not much sales appetite, not much selling appetite at the time being. So I just would have preferred you going into that one. Now, the only issue you've got right now is that earnings are tomorrow. And earnings will be, let's have a look, before the open. So, what are you going to do right now? You've got, what, an hour and a quarter until the market closes. And this has been one ridiculous. I can show you stocks that have gapped up, gapped down, and they were all surprised this earnings
Well,
season. What are you
I
going to
saw
do?
one today that dropped like 60%. Did you see
Yeah.
that? It was
You
like
see,
Alto.
whatever,
Alto was
whatever,
crazy. My
whatever
buddy
you do.
bought it last night before the close.
Right. So look, whatever you
Yeah.
do, it's going to be the wrong decision. You got to that's just know that. If you bail out now, it'll gap up to 45, and if you keep it, it'll go down to 25. So
Yeah.
the question is, what are you
I'm going
going
to
to
get
do?
your permission to hold on to it though, because I know what I risked and I'm okay if I lose that. Um, I don't know.
What have you bought the stock or the options?
The option. I
Right.
bought the option.
You bought them you bought expensive up deep in the money or at the money. What have you done?
I bought at the money. and I bought them for long term. I bought them way out.
Right now, you know, I told you I was going to get interrupted. Let me just bring a certain. Come and say hello to Casey.
Hi.
Okay, I'm gonna go. I'll see you soon. But close
What's
the
his
door.
name?
That's Monty. Close the door for me.
Monty.
Yeah,
Cool.
Monty is he's a lovely little character. But if you could go to bed, that would be super handy. He's just ignoring me, unfortunately. But and Zippy's coming as well. But so anyway, we have an audience here now. So anyway, sorry about that. Yeah. So you've done that. So what your options were they in the money or
Let me
were
check.
they?
Just let me check where we're at here. They are just right. I got them right at the money. Yeah.
Bad student. Bad. Well,
Oh,
that's
that's
not
not how
my
to
way.
do it. You want deep in the money. That's what I
Well,
need to
yeah.
buy.
I mean, how far out did you go?
Um, I went at 30. They're at 30.
Sorry, you bought the 30s, but
Yeah.
how far out in time did you go?
Oh, how far out? January of 25.
Yeah, you got some time.
Yeah.
Couple of yeah. Okay, so 2.5 months from here. Um.
No, year and a half. Because
Oh,
it's
January
25.
25.
We're only in 23,
Oh.
guy.
Oh wow. Yeah, of course. Sorry.
Yeah.
I
No.
missed that bit. Okay, so you
Yeah.
bought tons and tons of premium there. So 30. What do you pay about 15 dollars? I'm guessing. I can tell you what they're worth. I have a thing.
I can. Yeah.
I
Um.
have a thing.
So yeah. So the thing is, I'm up right now. It was a good
Yeah,
trade,
that's good.
and so
Could you de-risk a bit, or do you want to
I
just
well,
go for it?
I mean, this is where I like to hit home runs, and so I'm thinking that it's going to be a big earnings, and it's just going to rock. That's
Okay,
what I'm anticipating. Um,
okay, I get
but
it. No,
but
no, I
you don't
understand. I
trade like
understand.
that. You don't you because to you that's probably gambling.
Yeah, I mean it's interesting to see. So the 30s right now, for 2025. You've got this in your kit, by the way. You can do this.
Oh,
Um,
okay.
but the
How
January
what
20,
button did you click to get there?
I just went into the either the analyzer or the pricer.
Okay, analyzer, got it.
Yeah. So should we have some fun with the pricing? Because you only well, analyzer or pricer. I just got into the pricer this time. So I've pulled up the
Okay.
January 2025s. You've gone 30, and this is all just historic stuff. Um, but we're not doing live, so this is all yesterday's prices. But you actually had 70 deltas on that because you're so far out. You're so far out on that one. Oh, actually, you did the 30. Yeah, you did the 30s then, because you were down here with the 30s. So that would be the equivalent of probably 32.50. Let me just do the equivalent of what you did. Um, some decent liquidity in there as well, which is your bid ask ratio is pretty low. Your delta was probably only 60-ish, 65-ish at the time when you did the trade. Um, Obviously, stacked time value versus extrinsic. You bought 90% time there, which is fine. I
Which
say which is
yeah,
fine, which is
I
not my way. I like the other way, but you've got lots of time on this one.
because you get a little
But
better
if we
price if
select this,
you get a better
uh,
price if you don't get as much time. You have to pay for that time.
yeah, you do. Well, let's
Yeah.
look at the one you've got and let's just price it in a certain amount of time. So, give me a date in the future, and when you think where the stock price is gonna go. Give me a date, a
Let me
target
go
date.
here. You mean like the actual time wise? Like,
Yeah,
okay.
give me a date in the future that will
Um,
that.
I'm thinking that oh, that's hard to pick a specific time and date. That's like really
Yeah,
pushing
but
it.
this is the
But
fun bit. Let's have
yeah.
fun.
Okay, so is how about 6 months, $50?
Okay, so in April,
Yeah.
I was going to say April the 17th, the stock price is going to be $50. Okay. And that's my option there. That's my January 2025 30. And so I press calculate. And you're anticipating if volatility is roughly the same and it may or may be a little less by then, that option is going to be around $22, and you bought it for about what, 10, 11?
Yeah, yeah, about that.
Okay, so you'd be doubling your money if the stock price goes to $50. So the stock is up by 30%, and your option has gone 100%. So you got like 3 times leverage multiple. Anyway, that's your kind of scenario. But you can have a lot of fun with this calculator because it shows you what it's worth today and then what it'll be worth at that target price, at that target date, at that target volatility. We didn't play with volatility, but we could do. So anyway, that's a nice little thing you can do while looking at a chart. You can even do different strategies with the analyzer. So we can have a look at a few others. If you want to see, tell me what else you'd like to cover. I just want to show you some things. I have got some stocks prepared though,
Okay, let's
just in
use what.
case you
Let's
want to
go
see
with
some.
what you're looking at. Yeah, let's do your stuff.
So we're looking at, and I'll just go to a 1 year chart, but you'll see with Apple here, OVI behavior was pretty negative, and then in January it changed its personality and then started to rise above key levels, the 50, then the 200, and you get a lot of nice action after that. So it's that kind of thing that I love to see. This is formerly Overstock. This one just changed its name yesterday,
Oh,
and
I didn't
I
know that.
yeah. So
They
that's
got
kind of
bought out,
funny.
or they just did a name change.
Well, they bought Bed Bath and Beyond, didn't they? So,
Okay.
so it's now called Beyond. And I highlighted this back in June because Overstock, as it was called at the time, is a crazy, crazy stock. I mean, it's proper crazy. And I've seen it go up tenfold and back down tenfold in the space of a year. It's mad.
I
But when it
like
was
that
doing this in
consolidation
June,
that we're seeing right now.
well, it's funny because in June, I mean, have a look at what happened in June. We went from deep negative OVI, deep positive, volume was kicking in. And that's when I mentioned it. 24th of June, I said, guys, on the 18th of June, I was saying, guys, this looks interesting at this point, and it could go bananas. And they went up by 70%,
See,
and it went
that's
all the
what the
way
kind
back
of
down
trade I
again
like. You
as
get
well.
in at $15 and goes up to 40. I like that.
Oh, it's mad. And also don't buy the options on that one because they're just really expensive.
Right.
But I have a few. Just a few examples because what I think it's really cool to just get the rhythm of this. Again, oh by the way, see the little blue lemon there. That means there's a lot of short interest in this stock, which could be make it vulnerable to a short squeeze.
Oh, that
But
what
if
is
you look
that?
at this
Is that
here again,
Celsius?
look at the activity near the key levels. It goes up, consolidates, good OVI, and then goes a little crazy. But you see, once you've got to sort of this kind of level here, it it's kind of too high. It's overbought at these levels. So I like to do my activity near those key levels, which is why we filter for them. This is
Right.
Quest Diagnostics. We had this recently as a potential interesting one. Again, you see it's post earnings. I love post earnings, by the way. So when you get a post earnings bump, you'll often get what's called post earnings drift, and that's what you get, especially when the options people are behind it as well. There's a specific reason why that happens. I'm just going to whiz through a few just because it's fun to do. Now this is a bearish kind of situation, and what you've got here is, I mean, look at the change in behavior of the options traders from deep blue here, nice and blue, to nice and red. And then, okay, I'm not getting that gap down, but you've got a gap down at earnings, consolidation, then a consolidation below the 200 with a red
Mm-hmm.
OVI, lots of selling volume, which means there's lots of these shares as supply on the market. And then it just drifts down pretty nicely. GE just had the most incredible run, and this is GE. I mean, and what could be more boring stock than
I
GE?
had
But
no idea GE was moving like that.
I mean, look at this.
It's
So GE, we've
beautiful.
had this a couple of
That's a
times with GE.
beautiful trend.
Unbelievable. So, but look at where the consolidation is. Right on the 50. OVI has been good. We've had the rise, and then you get that. And it's really difficult once a stock goes. It's really difficult to keep up with it and to buy at a low risk level. I'm no good at buying at the 20, although it did hug the 20 pretty much the whole way through. But I'm not good at that one. I'm better
So
at the
what are you
50.
thinking right now? Are you thinking that there's another opportunity because it's been consolidating? We got
Well, that's
positive
where it is now.
OVI.
That's where it is now, and it's too. This is now too bumpy and too messy for me. This doesn't work. That one doesn't work for me. So
Okay.
what you'll see is I go for really clear setups. Hershey's now could let's upset everyone here. Hershey's Kisses are the most disgusting chocolates ever. I don't. This is why when
Okay, I told you I
Hershey's,
didn't want you getting controversial.
oh, but look, as bad as that chocolate tastes, when you get that going on with a red OVI post earnings, that's a short all the way. And it had really low implied vol as well, so lots of leverage on that one. By the way, I will say this for Hershey: they bought Reese's, and Reese's are
I can't
fantastic.
stand that.
You don't like
Reese's
Reese's? What?
cups.
You don't
I mean,
like
I don't like Hershey's Kisses either. I like Snickers bar.
Snickers? Yeah, we used to call it Marathon in England, the peanuts. But you don't like Reese's.
No way.
Oh
No.
man, I love a Reese's. I love them. That I'm yeah. There's nothing better than milk chocolate, peanuts, and orange. That's my sweet spot. But I'm going off of that now. I'm gonna have to. I've taken inspiration from someone who lost. I think he lost 127 pounds in 28 weeks.
He stayed away from Hershey's
He
chocolate.
stayed away from anything to do with any what do you call it, non-natural foods, and he lost like
Yeah.
4.5 pounds every week. Amazing. um, okay, so Hertz, I didn't get onto this, and I had to apologize to everyone, but look, that there is our kind of thing. I just wasn't looking at it, this didn't pop out, but look, that bear consolidates under a key level with negative OVI. It's a sell, and it's halved since that time. Look, from 16 down to 8. And really nice stuff. So it's just the same thing every time. We already did the Russell. Obviously, you know that Meta Facebook did the same kind of deal.
Yeah.
So,
Yeah.
so you go back to January. Again, I miss this because I personally, and this is, with deep shame, look at that. It hugs the 50. OVI is positive. It's bumped from this level earlier. It's gone from 100 to 120 very quickly, and it's hugged that level. And do you know what? I'm just going to tell you the human factor here. I just don't like them. I just don't like Facebook, and so I don't want to look at it. But I
Yeah.
missed that,
I'm
and I
not a
was
huge Facebook fan either, but their stock has been great.
I mean, look at this. Look at this. And this is just, take out the human factor, but this was that's the area, and then it runs away, and it never looks back until July, and by then, I think that the air's out of the balloon at that point. So, but look at that, and look how low. Well, actually, the implied vol was a little high, to be fair, but even so, a great situation. Now, this one we did get. Um, this is nice. So this is Mertex before it got taken over, but look at why we're into it. This, this, and that. That's when the takeover. And you often will find stuff going on with buyouts, with
Yeah.
options traders get very active in the lead up to a buyout. So that was pretty nice. Matador, I want to show you this one because this was a sector wide thing. So I talk a lot about clustering in sectors. So the whole oil sector was doing exactly the same during the summer. And I just want to show it to you here. So the first thing that was going on at the time was this shrinking retracements was popping out on Matador. Number one. Number two, OVI changed personality, lots of nice buying volume here. And then in here is your buy area above the 50-day. And it trundled up really nicely. I mean, it wasn't spectacular, but a really solid trade from the point of view of market structure, as in the shrinking retracements. Look at that. That's beautiful. But we're not buying it down here. We're buying it up here on that first consolidation after it goes above the key level. By now, you know that market structures change on this. The personality of this stock is changing. OVI has gone from being inconsistent. The stock's been going from downward moves to now an upward move above a key level. That all it means is that people are looking as the stock goes above a key level. It means that you might have more eyes being trained on it, particularly this. So you get that confluence of circumstances over there, making for a pretty easy situation. And loads of other oil stocks were doing the same.
Yeah, this has been really good. I would like to kind of ask you about.
Go for it. Oh, you've gone you've frozen. One of us is frozen. I'll call you. I'll text you. Are you back?
Hey, am I
Oh, okay.
back?
You're
I got
back.
you again.
You're back.
Okay, sorry about that. I had a
It's all
little
right.
hiccup in the internet. Okay,
It's okay.
so Guy, I was wanting to. I I've learned a lot. Do you think this has been a great demonstration of some great fundamental strategies on how to trade in addition with your tools? I would really like to for you to share about your event that you're upcoming with,
Ah,
what you're going to
well,
be sharing, and how people can get access to that.
right. Um, so we have an event on the 2nd of December, which we broadcast and hold live in a hotel. So we do get people flying from all over the world to come to this event, but you can do it just as well at home as well. And it is a strategies day. We go through my specific OVI strategies, which go through breakouts, OVI breakouts, post earnings, which is probably the favorite of all of them. And we use all these filters that we use within software. So with the pack, with the event, you get the software, the full VIP stock trading software kit, which means that with one button, you can find shrinking retracements, flags, OVI, key level setups, etc. All the big money footprint setups. You also get the market timing software as well. So you can either tag along with me or you can
You get
interpret
all of
market
that
timing
if
stuff.
you sign up for the event.
All of it. And it's going at a very, very attractive rate for your people right now. At the moment, it's just literally it's literally 17.97, but that's not all of it. You get the software for a year, and the software always improves. As you know, you've seen the hot software develop over the time. But also, so that's on the 2nd of December. Now, the week before, we do a foundation day online. So I will take you through the real rudiments and the bare bones of everything, the theory behind it, so that on the 2nd of December, we do the strategies and you do exercises with me on that day. So I will teach you a strategy, and then I will have an exercise planned for you, and you go out and find using the software that you now have the access to, and with my coaches on staff online helping you as well, and we'll go through exercises to go and find a stock that is behaving in the way that we want it to behave, and we'll do it in literally a few minutes, literally just a few minutes, a couple of clicks, but just to show you the power of the software and the power also of being um, strictly adhering to a particular methodology. So the idea is you get to see how much time you're going to save while being very, very focused on a particular strategy. And we cover 5 strategies on the day, plus market timing. And we'll also go through an exercise together where we will figure out what's going on with market timing as well. So effectively 6 exercises on the day. So it's not just me there talking off a PowerPoint. It is we're getting into the nitty gritty. We are getting into the strategies. And then you get a whole year of support as well. We do mastermind sessions regularly. We it's and you also get a one-to-one. You might even get a one-to-one with me, depending on the scheduling. So you also get a one-to-one after the event. So there's so much value in it for such a low ticket that it's pretty insane. And your people, Casey, can have the version with your logo on it as well. So they'll be in your camp as well. So if you do want to do it, the link to have a chat with us, if you want more information, is ovi.to/consult, and have a chat with one of my team, and they will guide you through it and see if it's for you as well. If you just want to go and do it without any other thing, just go ovi.to/VIP, and that will also take you, that will just take you to a checkout. But if you want to talk to us and have a bit more information, see if it's for you, have a chat at ovi.to/consult. But yes, it's. I mean, I think you're probably going to berate me for saying why is it so cheap? And can I tell you
I'll
why?
tell you, why is
But
it so
I actually have a
cheap?
really good. I actually have a really proper reason for that, by the way.
Okay.
Um, and this is just, well, I'm sure you know why. Once you do this, I will pretty much guarantee we'll see you again next year, and the year after,
Right.
and the year
Yeah.
after, and the year after, and you'll be grandfathered in at the low rate as well. So, and we have to keep on improving for you, but we do, and that's why people keep on. So we're like a family. It's the same people all the time. But obviously, working with you, Casey, it'd be really nice to extend the family a little bit as well.
Excellent. Yeah, I appreciate that. And we've got all the links are in the description. And so you don't have to remember them, but you can just click them in the description. And highly recommend that you go check it out. I think this platform's awesome. I love it. I mean, I can't remember. Let's see. I think I've been using it like 2 or 3 months now. And even after it's taken me a long time. I just took my first real trade. So it didn't happen right away. I was taking my time, but
You're a busy man.
yeah, that's true.
We
Uh, but it's simple. It's very simple. I love it. I'm really excited about what's coming forward with this. So go check it out. Talk to one of guys, people. It'd be great to get this kind of training at the event.
it would be great to, because you have really good people as well. You're a great coach, and you've got good smart people there. What I would say is this, that there is an awful lot of sophistication under the hood. It's being done in the background here. So there are filters that we have you just won't find anywhere else. Obviously, OVI, shrinking retracements, and others. But the essence of the whole um, technique is market timing, stock selection with the big money footprints, and then trade plan. And the trade plan is geared towards de-risking very quickly, and that's what it's all about. So in your trade with Roblox, obviously we've had a little chat about it. In my world, we would de-risk that one very quickly. Now you're a slightly different animal, which is okay.
Yeah.
But my, so you're gonna learn. And I mean, we'd be drumming that kind of thing into anyone who
And
approach. Obviously,
I truly appreciate that. Like that is so needed. Yes. So needed.
but
Because
some people like a little bit of insight.
if I don't listen to your advice and things go wrong tomorrow, I'm gonna start crying and I'm gonna blame you.
I'll bet you I'm the one who got it wrong. But you see, but the only thing is that this earnings season's just really flaky. I mean, you got, as you see, you've got stocks doubling and you got stocks. I mean, it's not as predictable as you'd like it. We do, one of our strategies is pre-earnings, which has a very good hit rate, but you have to be very consistent with it. And this particular earnings season isn't one that I would be gambling on earnings necessarily, because it's been too many surprises the wrong way, as it
There
were.
has been.
Um,
Yeah. Yeah.
that there's earnings surprises that are predictable, and there's earnings surprises that aren't very predictable, and we've had an awful lot of the other type this time around. So but we do a pre-earning strategy, which is very, very cool, and which of course then, provided the options are cheap enough with implied vol, you could turn into a straddle as well, which we also cover in another situation that we do. But anyway, that's a whole other
Yeah.
bit of fun.
Yeah. Well, Guy, thanks a lot for taking the time out for doing this, and I really appreciate your work. Your work has been tremendous. Uh, take a break every once in a while. You need it. Get some rest, but you're doing a great job.
Well, I appreciate it too, Casey, and I look forward to, I look forward to getting going with your, with the Tipping Point brand as well, and also with your folks. But if anytime you want me on this podcast, provided people aren't throwing rotten tomatoes and eggs at me on the screen, I'd love to do it. Love chatting with you, and love doing this too.
Uh, okay. All right. Well, that we're gonna wrap it up. But again, go check out the event. The link is in the description. And thanks everybody. We'll see you guys next time.